Hi, I'm Jerry. I want to talk about support and resistance and price patterns. And to me, the most important price patterns that exist are those that involve breaking above the diagonal the diagonal resistance line. So here's a classic case where we're looking at the market phases. We've got everything color coded so we see phase one. So clearly all the red bars here mean we're in phase one, and we're watching the price fall. We're watching it, and we can see it bouncing off of these guys and trying to make it through first the 10 and then the 30. But if you start looking at these things, and they quickly bounce up and then they fall back. But you don't actually see the breakout until it actually crosses the 10-day EMA, actually crosses through the 30-day SMA. And to me, that's a diagonal breakout right there. Excuse me. If you have a rising trend and the price is rising, you can see it fall back. And again, it's kind of like a mini diagonal breakout, because there's one there, and there's one there, and there's one there. And again, it's doing the same thing to where it's in phase. It basically starts out, it falls to phase 4 through phase 5, and then might make it to phase 1. But typically, if it's in a strong bullish trend, you're thinking that it's probably going to bounce off the 10-day EMA, or a little weaker trend, perhaps off the 30-day SMA. So here's a case where that's happening. And if you look at, here's another one. Here's CAT. Same kind of exercise. Look at all the bull flags that we see on this rising trend over here as it's coming up. And it all looks the same. Except when it fell off over here and it starts dribbling back down, it can't quite make it out of its own way until you see some potential breaks in here. But it really can't get out of its own way until it can cross above the diagonal line. Now it tries here, it tries here, it tries here, and it does it for a little bit, but it falls back. So you have to be careful. But those are diagonal breaks. These are they're bull flags. And if you look at for Bank of New York, same kind of trend, same kind of tracking to where it's actually coming down and breaking out. So the significance of this, in my mind, is support and resistance. And I've added on this next chart my white dots. And the white dots basically refer to where the 10-day, they refer to where the 15-day EMA is changing direction. It's coming down and going up for breakouts, or for it's coming the other way. And as you look at the chart, you can see each of those are inflection points. And to my way of thinking, each of those white dots represents a area of either resistance, it's showing you where they're at, or areas of support, it's showing you where they're at over here too. This is interesting because you can look across here. This is a very interesting line that you see right here for this one. This is a critical line right there, to where you can see it bouncing off of this area. You can see it over here, and it's, again, those white dots are kind of showing you where support and resistance is hanging out. Let's see, what if we look at CAT? CAT's pretty much analogous. And every one of these things, if you look at the major upward trend that we had, it was flashing resistance areas at the top until it was time to say, let's get out of here. It was trying, every one of these little peaks here, it was trying to let you know that, hey, we are in fact sitting at resistance. And we did have that. And here's a case where maybe it's time to get in, maybe it's not. But certainly Where did it go? It went from this line, it went from this area all the way up to there for CAT. And it isn't just these three stocks, they're everywhere like that. But the one things that we're missing, in here is that I wanted to bring up is every time there's a turnaround, let's pick this here, every time there's a turnaround, there's going to be a hold. So let's turn off the bars that show the market phases, and let's turn on the normal red-green bars and look for hold signals, and I'll show you what we're talking about. So come up here and it says we're going to turn off the market phases. We're going to turn off that study, and we will turn on the holds study. And if we come back and look at the chart, we're now going to see where we have holds. We also have our white dots. Every time you're going to see a white dot, it tells you is in fact that was a support or resistance area. And every time we start to do a turnaround, we're going to see a hold. So there's one right there. They're hanging out over in this area, and that is a significant piece of information, because that's telling you that you cannot have this upsurge like that unless you actually do end up with a hold. So if you're looking for spots where things can turn around, well, it would be nice to be able to see if you can find those white dots on the watch list, or perhaps look for holds on the watch list and see what's going on. So, and if you do it for the other stocks we were looking at, you're going to see those holds sprinkled in there throughout these lower areas that are telling you, hey, we're trying to bounce up. They're also in here too. If you look at it, these upward areas, there's holds, there's holds. They're telling you that it's trying to move up in there. So the one last thing that I wanted to bring up was when stocks bounce, or when they're in a strong upward trend, they traditionally break this 20-day high or 55-day high. So on this chart here, I've turned on those studies, and one of the things that I noticed after I started looking at this thing is I put in on the chart, we've got a dotted green line which shows 55-day highs. Whenever we see that, that's the current 55-day high, and the white line is 20-day highs. And then on the chart, I'm going to zoom in from right here to there. Every time the price crosses through I don't see one here, but most of these green triangles, all the green triangles are in fact 55-day crossovers. That's when the stock was surging and it happened to cross over those points. And the interesting thing about this is this process tends to happen in clumps. They happen together. They don't just do one. So if you end up with one, there's a good chance you might see another and another and another. And it's interesting the way that occurs. And I was watching something at one time, and you can see, hey, they're all sitting over here. This was an area. There's an area that's sitting right here. We're already at the top, so it can't do much. Here's one here that shows we're at, and they kind of go up in areas. And this is really strong here if you look at Goldman Sachs for these areas where it's actually breaking out. So when you see a 20 cross, a 20-day crossover, here's the white triangles, that's the first step in the process to where the price is actually coming up. And as soon as it hits up to where the 20-day line, the 20-day high, and the 55-day line are on top of each other, then the price is now at the 55-day level. And you can just look at these guys go up, and there's a chunk of price action moves. Here's a chunk of price action moves. Here's some here. Here's some here. So when you see these guys and the bell is ringing in your ear that stuff is happening, it's kind of a clue. It doesn't just mean it happened just once. These things happen over and over and over again. So if you recognize that, it's kind of a key point. And on the other side of the picture, you see things like so here we just had a diagonal breakout right here. It just came up there, and if you look at this line right here where we see the 55-day high and the 20-day mingle, and you see it's right here's another 20-day. That's kind of a critical point, because that means at that point, as soon as it can get from this area to above that, as soon as you can cross these regions right here, that means that now the stock is no longer seeing this area as a resistance level. When it's on the top, it's seeing it as a support level. So as you look at this chart, you can see right here, well, this is a major line right here at around 330. As soon as it can get above that, that means that now there's a tendency for the stock to want to bounce from this 330 point to the higher. And so you can see right here, if we can cross from this point to maybe 345, 347, that's a significant point. So if the price can get to there, then that's the next level of support that it's going to have. And then again, the next level of support is going to be right over here. And if you look across the chart, you're going to see where these prior highs were on the chart as it was coming down. So it was making these on both sides, and sometimes we don't realize it, but there's a point, and if you shoot across, you're going to see these same kind of things taking place. Look at that line right there. Bam, there it is right there, right there. That's a critical support / resistance transition boundary. And if that price can get above this, but below here, it's using it as resistance. But as soon as it can get above it, it's going to now try and use it as support. And I've watched this, and it's a real thing. I know James puts him on the watch list, and he had that. And it wasn't until I drew up this chart here that I realized that these things were real. They happen in waves, and you can just kind of see how they go. So here's a case of where it went, and then it kind of like had to build up enough energy to get above it, and then it's to the next level. And that's just the way it goes. Let's look at another one here. This is CAT. CAT's more significant over here. What do we see on this side? Not too much right now. We've got a major divergence or a major break between the most recent 55-day high and the 20-day high. So it's nothing like it was for the other, for Goldman Sachs. But Bank of New York, on the other hand, this could actually be in that spot. So we haven't seen any real significant breakouts yet. We know we've just bounced above the 30. We have a golden cross right in there, but the next levels of support, next major one is going to be right at this level, right around $46, $47 a share. If the price can get above that, that's significant. And then again here at this level. So those are critical things, and one of the things that I built into the watch list was this column called breakouts. And let's look at something that has more volume, if you will. Let's look at the S&P and see if I can show you some more in here, because it's very critical. And I've color coded it. So if it's green, it means that there's just, and in this particular column, I'm looking for CAHOLDs. CAHOLDs are significant because they're telling me that, hey, something happened to the price, and we're trying to break higher. I look for CAHOLDs. I look for 20-day highs. I look for 55-day highs, and I look for breaks above the close higher gap type breaks, where there was a one day it jumped up. And if you can see those gaps happen along with major changes in volume, price volume, those are key areas. So these are color coded, and so if you happen to have just one indicator that took place, it's going to be green. You'll just see one. So if I click on this guy, we're right down in here is where we're at. We only have one thing that took place. If you see one that's oh pooey, we only have one color. We need to find something that's got other colors. Let's go to let's look at the NASDAQ, see what happened. Here's some other colors. So if you see one that has two, it's orange, or this color here, this means that this was a 20-day / 55-day high. And it's like I was telling you before, if you're in this region where there's multiple green triangles, it means that this thing is going up. And oh, by the way, I can tell from this chart, it's trying to make it to 230. That's where it's trying to go. That would be its next target. So if you're looking for a spot where it's going to land, it's going to be up in that area someplace. And if you find stuff that has purple is the strongest of all. So here's a case where we got a 20-day high, a 55-day high, and a close higher gap. And this is what they look like. So if I put it in here, something happened. There's a gap from here to there, and I wanted to, let's see if I can show. I'm going to break stride with you a little bit. Holy smokes, look at this. This is my volume line showing what's happening to the volume for this particular stock. Don't know what the story is on it or why, but I can tell you that this is 1.5 times the volume. So I read a book many years ago by Bill O'Neill from IBD, and he talked about when major investors, decide to take positions in stock, and he said it was kind of like an elephant getting into the bathtub. Well, here's a case in point where the elephant has just stepped into the tub right here, because the price volume doesn't do that typically on its own. So anyway, I wanted to point this column out because this column is pretty significant, and it's tied to specifically looking for breakout symbols. And if you can sort this thing and put these things that have colors together, you can see those kind of things taking place. I don't even know what these guys are. This is a utility stock. Doesn't have too much market cap, but it's got some. But again, here's a case of where somebody's taking ownership, deciding that they want a piece of the action in CEG, whatever company that is. And oh, by the way, there's our white dot. There's our magenta up arrow. There's our line crossing above the. There's our golden cross taking place right there. And so we're in a situation now where it's quite possible that we could start to see some 55-day highs. This is where it'd be useful to go and look at a weekly chart of what this is. So this is a brand new company. That's why there's not much in here. Anyway, I wanted to bring up that that point that we have here that shows just the relationship of what the price patterns are in regards to support and resistance. And it's very critical, and if you're mindful of that and you can see other things take place at the with volume, then it's a big deal. And so I wanted to make sure that you caught the significance of that.